Is Toyota a buy or a sell? Let's get started with the model. This is a large cap company, 228 billion market cap. They're trading at 172 a share, and they have 1.3 billion shares outstanding. Toyota manufactures and sells vehicles under the Toyota and Lexus brands. It sells compact cars, mini vehicles, mid-sized luxury, sports, specialty cars, SUVs, pickup trucks, minivans, trucks, and buses. The company also provides financial services such as financing, leasing, insurance, and credit cards. It was founded in 1993, headquartered in Toyota, Japan. There is a city in Japan called Toyota. It was formerly named Kuromo. Let's take a look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They burn a lot of cash in this company, -$5 billion up to -$12 billion in cash flow. They actually have more debt than any company in the world. Not only do they spend a lot in CapEx, but they have to pay back the debt and pay the interest on the debt. Net income is the profit or loss on the income statement. It's revenue minus expenses. That looks really good, peaking in 2023 at $32 billion, down to $28 billion in the trailing 12 months. Revenue is the sales for the company, and that's grown a ton from $200 billion to $300 billion. Not many companies generate $300 billion of revenue in 1 year. They also pay a dividend, 2.19%. Since they have negative free cash flow, that means they need to take on debt or dilute shareholders in order to pay the dividend. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's $315 billion. We discounted those numbers back to today using the weighted average cost of capital. We got a value of the company of $265 billion. We divide that by 1.3 billion shares. And we get a calculated stock price of 200. They're trading at 172, so they're trading at a 14% discount. It's a buy according to the model. What do you think? Do you think it's a buy or a sell? Let me know in the comments. There are 34 companies in the same industry as Toyota, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. The reason they have negative free cash flow is because they spend a lot in CapEx, $21 billion, double Tesla. Even though they have a lot of debt, their equity is similar to their debt, since their debt-to-equity ratio is 1.1. They pay a dividend of 2.2%. Only 6 companies pay a dividend in this industry. They have the worst free cash flow by far. They rank second in market cap. Their price multiples look really attractive, except price to free cash flow, since they have negative free cash flow. They generate the most revenue by far, triple Tesla. They're double Honda, and more than 50% higher than GM and Ford. They're not growing as much as the other companies. Their 5-year revenue growth rate is 3%. The average is 10%. If you put $10,000 into this company 10 years ago, you'd have $15,000 today, a 50% return, only a 4% annual return. About a year ago, the $10,000 would have been $20,000, but the stock has come down. So to summarize, I have them trading at a 14% discount. I give them a ranking of 8 out of 10 because I think they're the best car company. Would I buy it short term and long term? 7 out of 10. I do like the company. Not a huge fan of car manufacturers. Really good ratio, 7 out of 10. A great PE. Financials, 3 out of 10. Their revenue looks really good, but free cash flow is awful. But they have positive profits. It's just they're investing so much in the CapEx and they pay a dividend. So that's why they have negative free cash flow. Let's take a look at their latest financial results. $1 is about 150 Japanese yen. All these numbers are in yen. Here's their income statement. They show 2 quarters. This column is the 3rd quarter and 2nd quarter of 2024. So April 1st, 2024 through 9/30/2024. Total revenue, 23 trillion yen. That's equivalent to 150 billion US dollars. 21 trillion from selling products like selling cars, 2 trillion from financial services because they provide leases, they also provide insurance and credit cards. Margins for vehicle manufacturers aren't so great. In order to generate the 21 trillion of revenue, it cost them 17 trillion. Those are all the costs to make the car. The cost of labor, the cost of material, the rent for the warehouse. The margins are better for financial services. 2 trillion revenue, 1.3 trillion expenses. Then you have SG&A. Those are all the expenses not directly tied to making a product or providing a service. So total expenses, 21 trillion. which is higher than last year, but revenue was higher than last year, so you would expect expenses to go up. Operating income is lower though. With higher revenue, lower operating income, $2.5 trillion, last year $2.6 trillion. And their net income $1.9 trillion, last year $2.6 trillion. The big swing was foreign currency translation. This year they had a loss of $226 billion. Last year they had a gain of $300 billion. So that's a $500 billion swing. A swing in the wrong direction for 2024. EPS 142 yen. Last year 191. So earnings per share is roughly $1. Let's look at their balance sheet. 34 trillion yen of current assets. 32 trillion of PP&E. So their total assets 89 trillion. A little less than last year of 90 trillion. Total liabilities 54 trillion, a little less than last year. Their biggest liability is long-term debt, 21 trillion. This company has the most debt of any company in the world, 217 billion of long-term debt. Evergrande, the Chinese real estate company, is second, 174 billion. Volkswagen is third, 166 billion. Then you have Verizon, Deutsche Bank, Ford, SoftBank, the Japanese investment firm, AT&T, Deutsche Telekom, and the France Electric Company. Let's go back to the balance sheet. Assets minus liabilities equals equity. 35 trillion of equity. They profited 34 trillion from running their business. Retained earnings is a sum of all their prior net incomes minus the sum of the dividends they paid out. So they're a really profitable company. Let's look at the statement of cash flows. The first section is operating cash flow. And operating cash flow is net income converted to cash. So their operating cash flow and net income are pretty similar. Usually operating cash flow is higher because you add back things like depreciation, which was 1.1 trillion. But they had some big negatives, which brought it back to equal their net income. Last year, their operating cash flow was lower than their net income. The second section is the investing section. If they invest in PP&E, that comes out of the investing section. Also acquisitions. If they acquire another company for cash or they sell a company for cash, that also goes into the section. So that a cash outflow of 3 trillion. This is for the trailing 6 months. In their investing section, if they add or pay back debt, that's in this section. Also dividend payments are in this section. So they paid out 600 billion of dividends to their common shareholders. They bought back 900 billion of common stock, 900 billion yen. 900 billion yen is equivalent to $6 billion US. Here's a breakdown of the revenue by country. Of the 23 trillion of revenue, 10.5 trillion Japan, 9.5 trillion North America, 3 trillion Europe, and 4.5 trillion Asia. They had 2.5 trillion of operating income. Most of it is from Japan, 1.5 trillion. They didn't make that much of a profit in North America. 9.5 trillion of revenue, 114 billion of operating income. Very slim margins. They had great margins in Japan, about 15%. The margins in Asia was about 12%, but North America and Europe, pretty weak. I think this is mainly due to foreign currency translation. Let's look at TM on Simply Wall Street. Its last price, 172, 229 billion market cap, down 0.5% in the past week, down 8% in the past year. Not doing so great. Here's where the stock has been trading since 1992. So it definitely moves up and down a lot, but overall it's pretty much only gone up. As long as you held the stock for at least 2 or 3 years, you probably made money with it. There were some pretty big dips here and there, but they all came right back up after a number of years. Its all-time high was this year in March, 250, so it's down quite a bit since the high. This could be a great time to get in. Simply Wall Street's valuation is 158. They say the stock is 9% overvalued. There are no analysts pricing this stock. That's kind of odd. Here's their revenue since 2013. It was 25 trillion yen, which is equivalent to 160 billion US dollars. And you can see it was going up slightly year after year, up through 2019. Took a dip from COVID, down to 26 trillion yen, but it's gone up a lot since 2020. Look how much it's improved. 46 trillion yen currently, which is equivalent to a little over 300 billion US dollars. Let's look at their debt. They have more debt than any company in the world, public or private company. So it was 16 trillion yen in 2013. It peaked at 39 trillion in 2024, which is about 235 billion US dollars. You can't just look at one number. You have to look at their equity as well. And their equity is almost identical to their debt. So they're not doing that bad. They're much better off than a company with 10 billion of debt that had 10 million of equity. And you can see they have a lot of cash on their balance sheet, 14 trillion yen of cash. Plenty to service the debt. Here's their dividend yield since 2015. It was 2.9%. It got up to 3.6% in 2016, but it's been pretty steady. It came down in 2022 to 2.2%, back up to 2.8%, down to 2.1% currently. But the forecast is 3.8% by 2027. They pay a semi-annual dividend. It looks like the dividend in March is the bigger one, and they pretty much raise it each year. The dividend in March was their highest ever, 255. The one in September 2023, 178. The CEO's salary is 623 million yen, and that's his total compensation. Tenure as CEO, 1.6 years. 44% of the company is owned by institutions, 41% by the general public, 12% by public companies, and 2% by the state or government. Their biggest shareholder is Toyota themselves, 9%. Nisei Asset Management. This is a private Japanese pension fund. JP Morgan is the third biggest shareholder at 4.5%. Nomura, the large Japanese bank, 3%. They employ a lot of people, 339,000 in 2014, up to 384,000. And the ticker trades on the OTC Pink Sheets, London Stock Exchange, the Tokyo Stock Exchange, Deutsche Börse, Wiener Börse, Bulgaria, New York Stock Exchange, Mexican Bolsa, London Stock Exchange, Deutsche Börse, Buenos Aires, Sao Paulo Bolsa, and the Stock Exchange of Thailand. If you really want to understand how the income statement works, click on the video in the top right corner. Thanks for watching.